So we are going to move to the second investment case, which is Via Varejo. Now, Via Varejo is Brazil's leading electronics retailer. I want to highlight a couple of key products, and these are some products that I believe everybody in this room feels are almost essential. They're part of life. In particular, as you look at smartphones, smartphone penetration for Brazil is currently at approximately 40%. Now, this compares to the US, which is getting close to 80%. And when you look at some of the neighbors of Brazil, like Chile, Mexico, and Argentina, it's still actually higher than what you're seeing in Brazil. So we feel there's a nice opportunity for penetration to continue to improve. Now, another category to highlight is washing machines. And you see a washing machine, which, for all of us, it seems like it's almost a basic necessity. You have a significant gap between where they are in terms of penetration versus not only developed countries, but also their neighbors. So Via Varejo has 1,000 stores across Brazil. And just to give you a little bit of sense in terms of the scale, their market share of sales is larger than its three closest competitors combined. This is something that, for us, gives a great opportunity for Via Varejo to continue to benefit from this penetration that we expect to continue to be a positive tailwind. Now, Via Varejo is also, like Copa, a stock that we see as we can develop a competitive advantage on. It's a small cap, not very well covered by the sell side, given that the focus is on larger caps. At the time when we actually made our initial purchase of Via Varejo, it only traded $1 million a day, and this fits squarely into the strategy that Fernando had mentioned earlier when we were looking at the end of 2015 and 2016 for those opportunities in franchises that we knew that we felt that the pricing had just gotten ridiculous and that we could actually even go lower in terms of the liquidity scale to build these positions. So I want to send it over to Wes Brooks for him to introduce himself and also give you some insight into the franchise value of Via Varejo.
Afternoon, everyone. Is this working? Yes. I'm Wes Brooks. I joined INCA in July 2015. Previously, I worked at Morgan Stanley as an equity research analyst for a little under 7 years, with the last 3 years of that covering Latin American consumer and agriculture stocks. Before that, I qualified as a chartered accountant in South Africa working with PwC. And at the time I joined INCA, I was living in Brazil and I'm fluent in Portuguese. So Via Varejo is actually a company that I have a long history with. While living in Brazil, this is a company that I've walked through the stores, I've been a customer of. It's also a company that, from covering the consumer space, I've known about this company. Its parent is CBD, also known as Pão de Açúcar. This is the biggest food retailer in Brazil and a company that INCA Investments and I have a long history of covering. So this is a company that we know well and we've had a long history with. And I'd like to dig a little bit more into why we see this as a franchise company. And if we can focus on the chart on the left here, this is Via Varejo EBITDA margin and ROE in red compared to their nearest two competitors in the years leading up to this current Brazilian crisis. So we're talking 2012 to 2014. And what you can see is that Via Varejo has made EBITDA margins almost double their two nearest competitors, and that's translated into ROEs of above 20%, while their competitors are making 10% or less. And why is this? The key is that Via Varejo's dominant market position and their strong brands really give them some sustainable competitive advantages. For instance, in purchasing, where they are the most important distributor for the likes of Samsung in Brazil. And this allows them to both buy and pay on better terms than their competitors. They also have the broadest and best distribution network in a country where logistics and distribution is quite tricky. To give you an example, 45% of their stores are outside of the two main economic states of Sao Paulo and Rio de Janeiro. And this means that they really cover the whole of Brazil, and they also cover all consumers from the richest with their Ponto Frio brand all the way down to the very poorest with Casas Bahia brand. That is really what translates into these really excellent margins and returns. But this is also a company that we know, no matter how bad the environment gets, we know they're not going to go away. When we purchased them, when we initiated our position, which was after the fourth quarter results, they had a last 12 months free cash flow yield of 65%. They had 2.3 billion reais of net cash on the balance sheet, which was actually more than their entire market cap. This is a very rare thing. So, in a very difficult environment, this is a financially solid company.
So once again, as we go into our process, and we see here in the chart, it's very clear that this is a situation in Via Varejo where we saw a company that we knew the franchise, we had analyzed it for a long time, that we had consumed their products. And when we saw a stock that actually had fallen from peak to trough by 94%, and we look through the details that Wesley is mentioning in terms of the amount of cash that they had on hand, we were instantly attracted to it. So I'm going to let Wesley go through and talk about how we actually build this position into Via Varejo.
Yeah, so as Efrain mentioned earlier, this was a very low liquidity stock, trading about $1 million a day. And so ideally we wanted to get to an initial position of about 3%, but we just couldn't get there in a short space of time. In fact, it took us a good 3 months to get that position, and we did it in increments. So we started with 1.5%, and then we took it to another 1.5%. And then as you can see on the chart, a month and a half or so ago, we made the decision to increase our position again, because as time has gone, we've gotten more data points that's given us more confidence in the thesis, and we'll talk about that a bit further on. But we made that decision, and we've actually just completed buying up to 4.5%.
Great. So just like Copa, once we've identified the company through the screening process and idea generation, we needed to take a much closer look at the symptoms, what was going on, how this was being translated into the financial results, what kind of impact this was having. As you can see, when the stock has dropped 94%, this is something that's going to be very pronounced and very, we need to be very focused on that. So I'm going to let Wesley go through the details of the particular negative view and how this was translating.
And I think the chart on the left here really tells you the story. The shaded gray line is real GDP growth in Brazil. The red and dark blue lines are electronics and furniture and appliances sales volumes in Brazil, the whole industry. And I think, if you look historically, what's interesting is these are products that, because of the very low penetration, grow at a multiple of GDP. And that's really the long-term thesis here. But what you can see is since the Brazilian crisis hit in 2015, demand has collapsed. And why is that? Because these are cell phones, fridges, TV. These are products that people want, but they're also products that when there's a lot of uncertainty and people aren't secure about whether they're going to have a job, that you can kind of hold off on. And so what's happened is volumes have been running down around 20% since the middle of last year. And Via Varejo, remember, they run stores. They have a very big fixed cost base to run all of these stores. SG&A is about a quarter of sales. And so they have a huge amount of operating leverage, and that's just completely worked against them in this financial crisis and wiped out earnings. In addition to all of the uncertainty, in addition to the rising unemployment, these guys, the way consumers buy these kind of products in Brazil is on credit. So almost 3/4 of Via Varejo's sales are on credit. 60% or so banks allow them to purchase on their credit cards with interest-free installments of up to 6 to 12 months. Another 13 to 15% Via Varejo offers credit themselves to some consumers. Also, they pay on installments of 6 to 12 months. And with the increase in uncertainty, Via Varejo and the banks have been pulling back their approvals. And we can see this on the charts on the right-hand side. The red line is the growth of credit card loans in installments. And you can see that that has turned sharply negative. So the banks and Via Varejo are all pulling back this kind of credit. And all of this kind of goes into the market view is that we have no visibility, demand is terrible at the moment, and with credit being a big issue, we don't know when demand is going to come back, and we're not willing to look through that until an eventual recovery.
So now the process takes us to, once again, challenge the negative market view. How do we do this? Is, again, we open up the toolbox in order to make the analysis on Via Varejo and what kind of thesis we can develop in order to take on this negative market view. Now, every investment has its nuance. While we use all the tools for all the investments, some tend to be much more focused on certain tools versus others. For Via Varejo, for the development of the INCA, the investment thesis was very focused on upside potential. So let me let Wes take us through that analysis in more detail.
And as Efrain mentioned and Fernando talked about, we do have the whole toolkit that we use, and we've done that used that on Via Varejo. We have normalized the results, taking out all the non-recurring restructuring items. We modeled the business looking into the fixed versus operating cost structure and things like that. We also met with several ex-executives of Via Varejo and of their competitors to make sure we really understand their market position and also the impact of credit on both their balance sheet and demand. The key thing with Via Varejo that was different to, say, a Copa was that Brazil was in the midst of this severe financial crisis. And for us to say, let's model 2017 EPS, there was just way too much uncertainty. It was anyone's guess. But what we did know, and the basis for our thesis, was that these are products that consumers, when the economy recovers, are going to start buying again. Via Varejo has a huge amount of operating leverage to this, and they're not going away. They are the most financially solid company in the sector at a time when many of their competitors, in fact the number 3 player, are in a very dire position. And so how we looked at it was we said, as Fernando mentioned earlier, well, we feel pretty comfortable that Brazil's going to normalize in 5 years by 2020. So how does this look in that situation? And we focused on our upside potential analysis, and we said, okay, revenues go back to pre-crisis levels in nominal terms. So this is back to 2014 revenues in nominal levels in a country that the last year has had inflation 8 to 10%. And we're talking about 3% annual growth. So this is a very conservative revenue assumption. We have margins, EBITDA margins, going back to 7.5%, lower than the historic 8.5%, but obviously above the current 4%. And this gave us an EPS of R$1.40. So to put that in perspective, that's 30% below the 2013-14 average EPS. It's also, based on the share price at this time, was under 4 times PE. So on very conservative numbers, we got this EPS. And then we said, well, let's put this on a very conservative PE multiple in 2020. So we used 12 times, which is the average for Via Varejo's peers historically. But this is a company that's historically made over 20% ROEs. So we could be being too conservative. But again, conservative EPS, conservative multiple, and we got to a price target of 17 reais, and that on a real basis was 166% upside and a 22% real annualized return. And we said, well, we'll take that. We'll take that, and there is a chance that Brazil normalizes sooner, and in that case, we do even better.
Great. So now we shift over to continue on with the monitoring. And let's just recap a bit in terms of a company that we know, we like, we've analyzed, we identified the share price, the share mispricing. We look at the stress points, look at the financial results, and develop a thesis to counter that consensus. Now, for Via Varejo, the thesis, again, was not, it wasn't our focus on when sales would start turning positive, or same-store sales, would turn positive, or how the EPS would the trajectory of the EPS. Our focus was on our view that this would, once the environment became normal, they would be able to recover that sort of market share, which we're seeing already. And in addition, that they would come out of this crisis in a stronger position. So that is what we are, constant efforts in terms of monitoring are aimed at, making sure that this thesis is following through. So I'll turn it back over to Wes to give you some of the latest data points that are proving our thesis.
And that's really what we've seen. The most recent data points are the second quarter results. And what we saw is that the environment is still very difficult. We're not really seeing an improvement on the consumer side yet. Industry sales were still running down about 5% year on year. But Via Varejo sales have actually stabilized. And in fact, on a same-store sales, they grew a little bit in the second quarter. So that really is in line with our thesis that these guys are going to benefit, and it's the other guys, the smaller competitors, that are going to lose out. And that's really what we're seeing. This is an industry where electronics are also sold by, for instance, hypermarkets or department stores that have their core business, and then they'll sell some electronics and things like that as well. And those guys are pulling back dramatically, either just reducing that space and putting more food there, or completely exiting that business. And those volumes are going to Via Varejo. What we've also seen is an improvement in the outlook. Although there's no real improvement in the consumer, we've had some very important changes since we started this position. With the political changes that have happened in Brazil, inflation has started to tick down. What we've seen is that economists that are watching Brazil are now expecting 1% GDP growth in 2017. They're expecting 2 to 4% growth in 2018. And we're seeing consumers, as we can see in the chart here on the left, this is consumer confidence in Brazil. And as you can see, since we entered our position, there's been a big improvement. And this is really critical, because for people to go out and buy electronics, this is really just confidence. They need to be confident that they have the financial security to go out and buy these products. And so this is really a key indicator for future improvement in demand for Via Varejo's products. And when we take all of this into account, we can say, okay, we have a little bit more visibility than we had when we initiated the position. And in fact, we could be seeing a normalization in Brazil sooner. And if we say, okay, Brazil normalizes in 2018 under the same assumptions, we get to the most attractive upside in our portfolio. We're talking about a real annualized return of 34%. This is still an incredibly attractive opportunity, despite the fact that the stock, since we initiated the position, is up around 40% in US dollars.
Well, great. Well, thank you.